CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures Contract opens the world to greater trading possibilities.
Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Iaccino. Welcome, Bob.
Good to be here, Jeff.
Well, Bob, exciting week. I'm hearing something about a Fed meeting this week. What are market expectations this week when Fed Chairman Powell actually speaks?
I didn't hear about this meeting. The CME Fed Watch Tool has a high probability of a 25 basis point rate cut, low probability of 50. Probably be more about the commentary again because the market is expecting that cut.
Yeah, the market really wants to see what he's going to allude to in Q3, Q4, potentially for another cut, maybe in October.
Yeah, is this a rate cut series or is this just one and done? Is it 50 and done? We don't know until we see the statement.
No, understood. That's what the market will really be clutching to. But let's get this first lightning round. You ready, pal?
Let's do it.
Gold glitters. Well, we have seen gold react to potential Fed rate cuts. We're seeing it move above 1,400. It's really found bid all of 2019. What's your approach here as we're seeing it back above 1,430?
Well, currently we're seeing the dollar index up 7 of the last 8 sessions.
That's right.
So what I'd like to do is see a pullback based on that and the gold-silver ratio. So the example I'm looking at is selling the week 2 August 1450, 1475 call spread in gold. So I'm selling the 1450 call for about $770, and I'm buying the week 2 1475 call for about $320.
This makes a lot of sense. So the selling of this call spread allows an investor to potentially collect $450. This is all expiring next Friday, August 9th. And it's interesting, the OCT futures, which is underlying here, was trading about 14.35. The at-the-money vol only about 14. But again, you're embracing the fact that there is premium. People are willing to pay for those upside calls, so you're going to sell that premium with both hands.
Absolutely, and that volatility has been pretty steady, so it seems like some of the geopolitical premiums coming out as well.
Now, this makes a lot of sense, Bob. And please remember, folks, that these are trade examples, not trade recommendations. Let's move into the second lightning round.
I'm ready.
Fed rate cut. There it is, Bob. What are your thoughts this week? The market is really expecting. I know you talked about the Fed Watch Tool being very high probability, but is more in the rate cut. Is this something that the market really demanded out of the Fed Chairman Powell? Because this is in stark contrast to where we were back December. We were talking about rate hikes 3 times and being on autopilot.
Well, you definitely want to watch that CME Fed Watch Tool because currently they're pricing in 2 more cuts. So that versus what's in the statement and what's said in the press conference, again, is the important thing here.
That's a great point. And whenever we go into an event like this, it's typically some type of binary outcome. So the trade example I want to utilize, I'm buying a put spread in the E-mini S&P 500. I want to buy the week 2, expiring August 9th, 2950, 2900 put spread. That allows me to buy the 2950 put for about $1,140. I know it's expensive, Bob, but I'm also selling that 2900 put for $750. Therefore, this is a debit spread. It's only going to cost about $390, but it allows, in the event we do get disappointed by Fed Chairman Powell, we see a little bit of a pullback or at least a back and fill down to 2950, this spread will fill out.
Yeah, what I like about this is the expiration, Friday, August 9th, so it's not that far out. And also, considering where the SEP underlying was trading, it's 30.10 when we price this out, and the low at-the-money volatility, about 11.56. This is a really good opportunity to take advantage of potential disappointment.
Yeah, and it's the yin and the yang. It's understanding where we want to buy spreads, where we want to sell spreads. So going into an event like the Fed, this is a historic meeting. We have not seen a rate cut in over 10 years, Bobs. So this is really the approach I want to take.
Right, and in the short term, and that's why I like the expiration, if we don't get what the market wants, we could see lower prices.
Great stuff, Bob. Thanks for coming on Striking Options. Tune in every week as we will continue to strike options.